Hello everybody, I'm your boss, Joe Boss. Welcome to another daily plan, and today we're going to go over the week ahead trade plans. I know yesterday we covered it as well. We covered some preliminary week ahead trade plans. There wasn't much going on after these big spikes. But now we have read the outlooks for the week ahead. It took me a few hours to go through everything. Had quite a busy day, so kind of had to stop reading some of the outlooks. And if you're in the trading group, which you get access to when you purchase these indicators and you start your subscription for stuff like the range probabilities, we'll be going over a review of the week ahead outlooks if you haven't read them yourself. Okay. Let's start this off with a quick discussion of the calendar for the week ahead. So I'm going to go into TradingView, and hopefully this time everything that I'm going to be talking about will be in the calendar. On, I believe, Monday, we have Japanese inflation. So the very first thing we're going to be looking at when we start going down these charts is we're going to look at the yen pairs, or probably the first time since I've been streaming outside of the dollar yen. And I don't see, I actually do not see the releases that I'm looking for. Oh, there we go. Japanese inflation month over month. So that's going to be happening a bit after the close on that particular trading day. This can create quite a bit of volatility. So if your inflation keeps going lower in Japan, the Bank of Japan will likely continue their hawkish policy statements. Also, if I'm not mistaken, when I read through the outlooks, they said dollar yen is close to intervention levels. So as an FYI, if we look at this on a weekly chart, let me hide these for simplicity's sake. This was a bunch of intervention. This was intervention. Around this 150 plus zone, you start to see intervention risks. So there's that on the plate, and every bit of analysis on the yens has talked about it. In fact, there's two particularly good podcasts that I listen to. One from MUFG and one from JP Morgan. They talk about their FX. They have some FX specialists come on and give their expectations. They went pretty in-depth on the RBNZ, which is the next topic we'll talk about. But before they talked about the RBNZ, they talked about the yen and inflation expectations, because that's the first sort of major event that's occurring next week. And that is happening on the Monday of next, so the next trading day, pretty much. Now, if inflation in Japan prints lower, even just a tad lower, it's going to reignite the hawkish expectations and continue to suppress the yen prices. It could probably continue, could probably reverse some of these larger moves here we've had. Yeah, CAD hasn't been holding up too well, but New Zealand and Aussie are starting to look like targets on the short side of things. Let's go ahead and bring up our monthly charts. Yeesh, this is not a good spot to be taking shots on Aussie. And that is just crazy. Yeah, you're in a tail spot here. All right, so no useful interpretations here on the month. So when we look at next week, yeah, either right at the open or just a tad higher, call it 50 pips higher, are probably ideal spots for taking shots on the short side here on New Zealand. And considering now that we're on New Zealand yen, this is probably going to be the most watched pair next week, because you have RBNZ and you have inflation. And then on Friday, you have European inflation coming out. You have all this preliminary inflationary data coming out. So that will end up moving euro probably into Thursday, Friday of next week. And we'll get to that in a moment. But first, let's start with focusing on the big events, which is RBNZ and Japanese inflation. So right out the gate, I'll set an expectation that we have some move higher once we get into the first trading day of next week. Go ahead and let's make that green, put in our timestamp. It's at 23. So either up here or right at the open. I'll go ahead and conservatively place it around here. And then as RBNZ comes up, they'll probably stay hawkish. Actually, I'm thinking about flipping these around. So down first. $20.24, $2, $23. Copy that so I don't have to keep writing it. And then take it from here to here. And then we can look at our closing odds. Yeah, essentially a more or less sideways movement for the close. All right, let's move on to the next yen. Dollar yen. We did not meet these expectations from 4 days ago. That was a total miss on those expectations. However, this looks like it's an expectation so far for an end of month setup. So if I go ahead and I pull this up, yeah. Going into next week, there is some chance of going down there, but you're so damn high. Yeah. Plus, we do have some US data coming out. And if it does signal some slowing growth in the economy, that would give some fire to the people who are more dovish and expecting, don't get me wrong, all the expectations for the first Fed rate cut come in June right now. And it doesn't seem like they're going to get pushed out too much. I have a feeling that the rate cut odds in May might make a bit of a comeback come March and April. We'll see. It really depends on how the data prints out, if it shows US growth slowing more significantly, and how hawkish the policy is out of Fed participants during those March and April prints. But for now, for the week ahead, let's think about this. This would probably be yen strength here, and then I don't have too much as far as significant expectations for any more of a movement. So this is as far as I'll go on setting expectations for dollar yen next week. So you're going to see some of these lines that are not timestamped. I said in the last stream, I'm just drawing these preliminary lines, and then we'll modify them as we get into this stream today. So in today's stream, I'm going to be timestamping these and seeing how well they line up with my expectations now that I've read the outlooks for the week ahead. So let's get into this. Euro dollar. This actually lines up quite well with my expectation of going into Thursday, Friday. You get the CPI data out of Europe. And if the yen does get stronger and the dollar, the microeconomic data out of the United States indicates slightly slower growth, this does make sense to me, but I don't even know if you'll hit this high here. But for now, I do like this expectation that was drawn from yesterday, given the information that I know. So I'll go with this. Let's move on to the next dollar pair, which is Aussie dollar. I'm a bit more bullish on the Aussie, so let me adjust these. Let's go ahead and check out our seasonal stuff here. Yeah. No major news out of Aussie, but I do agree with maybe you see a bit more higher up here. I was like, this does seem like it's an undershoot, considering you are seeing some policy easing out of China, which actually is helping Europe more than Australia. The correlation between commodities in Australia and the Australian dollar are weakening. So it doesn't make too much sense to me to continue to rely super heavily on signals from China being the main driving factor for Australia or New Zealand. It will provide some lift, don't get me wrong, but the main driving factor is going to be their monetary policy. Absolutely, it's going to be their monetary policy and their inflation. Because until those correlations with the commodity prices and the currencies, Australia has a lot of iron ore and coal correlation, and New Zealand has whole powdered milk. Until China gets its economic footing back more securely, until there's a stronger market consensus around a stronger China rebound, and those commodity correlations between the currencies and the commodities of those respective currencies improve, I'm going to be leaning more heavily into looking at how the countries are doing macroeconomically and in a relative policy stance against the Forex pair that I'm looking at. So in this sense, I'll go ahead and set a slightly more bullish expectation, maybe a slightly less bearish expectation. Yeah, sometime after the Japanese release comes out. And depending on how hawkish the RBNZ is, man, a lot of people have been talking about Australia, New Zealand, this rate. And what was interesting when I was listening to some of the commentaries, that a lot of analysts were bullish on this pair going forward. And you can just look at these probabilities, like 90%, 90, 89% of the time your high is somewhere higher around here. Real quick, let me pull this up. Yeah. So maybe post RBNZ, you end up a bit higher here. Because the expectation for the RBNZ, the consensus view for RBNZ, is that they have no hike and they just give some hawkish policy. So I would set this as my expectation for the high. I don't know necessarily when the pop is exactly going to be coming. Maybe it could come a day before in anticipation of the RBNZ. It could come during the RBNZ meeting. But this would be a relatively decent expectation, and then there is significant risk of actually going like way up here. I'd say nominally, I'll go ahead and put my expectation here, but considering it's RBNZ, yeah, because nominally this is what I'd set my expectation for. But when you have a central bank move, and you can tell how I'm giving my commentary on how I expect the central bank policy to have more weight in moving the currency prices, I am leaning towards taking a more risky expectation of going up here. So how about this? I'll leave it like this. And then we'll go from there on figuring out our likely closes. Probably somewhere around here. Yeah, either a bit sideways or a little bit of a negative drift into the close. On the European data. Oh, and we got to color that blue to signal for the close. And real quick, we can try and figure out where the low is. Yeah, the low could be right off the bat or just a tad lower. We can go for something like this. So a little bit more red, maybe just over the first 24-ish hours of the trading week. And then we're talking roughly 100 pips worth of movement against the New Zealand dollar. For Aussie, it would be prudent to check out the low odds here. Wow. Oh, smokes. That's a lot of lows in that area. Okay. I feel a bit more certain about these expectations. Yeah. I like these expectations a bit more now. Okay, let's go back to Aussie dollar here. Let's see. Yeah, pretty much the same view here. I'll go ahead and lock in these expectations and then probably write up some new arrows as we get into the week ahead. A little bit more commentary and information here. Because while the US dollar can get a little weaker into next week, I net think that the US dollar pairs can be a bit choppy next week. My expectation for a lot of these US dollar pairs is that depending on the country you're trading, different performance. I don't think all these US dollar pairs are going to be moving next week. So you probably have to really understand exactly what the risks are around the country that you're trading, so Australia or New Zealand or the UK. I have a feeling that we're going to get quite significant different performance time-wise. Maybe the net average over the whole week is going to be roughly the same across all the dollar pairs. But I have a feeling that it's going to be choppy, and the timing of the moves between each of the US dollar pairs are going to be asynchronous. Speaking of, UK really ain't doing so hot. A lot of people are bearish on the UK. Yeah, it's got some upside, it's got some low side. No major economic events for the UK next week. There are some, but I think that the US dollar side of things is going to be dragging the pound lower over the next week here. Real quick, I want to see where we are at for the month. Yeah, see, a lot of your closes are around here. So I'll go ahead and put in a net expectation of going lower, and then a bit of a bounce into the close on the European data. Oh, gotta set that one to blue for my closing expectation. And real quick, let's look at our closing odds here on the probabilities, the probability pivots. Yeah, you can see they're kind of split. A lot of your closes could be up here, and a lot of your closes could be down here. So it depends on your net expectation. So if your net expectation is bullish, closing somewhere up here makes sense. If your net expectation is bearish, closing somewhere around here makes sense. Dollar CAD, so far so good. Yeah, this was the weird one I pointed out yesterday. You have some closes here, some closes here, some closes here. You have three kind of distinct spots over next week's seasonal data. I'm going to look at the highs. Yeah, a lot of your highs here. That does make sense to me. And this is why I did the preliminary drawings here. So then I could move them a little bit. And then we can timestamp them. Now we can switch these to our lows. So a bit more conservative on the low side. Maybe Canadian dollar has one of the lower bits of volatility, one of the least bits of movement. And I feel pretty all right with this expectation going into the week ahead. Yeah, I feel pretty all right about this expectation. All right. That is pretty much everything. And then on the dollar, because we can't forget the good old dollarino. This makes sense to me. And then let's check out our lows here real quick. Yeah, some pretty good odds of finding your low pretty close to the open. Good continuation odds as well. Yeah, that works. So dollar might net against all of the US dollar pairs. See the DXY move higher in the middle of the week, but then again, you have RBNZ coming out, and this can create all sorts of choppiness. I don't have the highest degree of certainty in seeing, this sort of super significant drop, but maybe it just comes down to here. Man. Yeah, it depends on how hawkish the RBNZ is going to be. I can only set expectations with the information that I have right now. So as we get new information, then I can update and change my expectations of what to do right there in the moment. And that's just how trading is. You can only work the information you currently have, and as new information comes out, you need to be able to interpret it quickly, accurately, and understand the ramifications of what that will do to an asset's price, how other market participants are going to interpret it as well. And sometimes when you're learning this, it can be quite confusing. You'll make an interpretation, you'll have some expectation. The data will come out and you're like, oh, yes, that should be bullish. And then the thing just plummets, or vice versa. And that just means that you were wrong on your expectations. That doesn't mean necessarily that you're a bad trader or that you're stupid. It just means that you need to study more. It means you have to learn about the expectations. You have to carefully read through the new information. Because all too frequently, I've done stuff like this. I'll read a headline of some new economic event that's just printed and be like, oh yeah, that's definitely bullish, or oh yeah, that's definitely bearish. But then the opposite would occur. And the most insightful thing I learned is you got to go into the weeds a little bit. So for RBNZ, for example, it's not enough just to read the headline, oh, they didn't cut, therefore they're going to have a higher for longer policy. So their rate cut expectation might get pushed out further into the year. Therefore, the New Zealand dollar should appreciate here. That is a perfectly legitimate expectation, but it might not be the quote-unquote right expectation for short-term market moves. Explicitly because there are minutes and there are arguments that go on, and then there's Q&A that occurs. And you want to know the qualities of the decision. And if the qualities of the decision are, well, we still see things improving, it depends on the hawkish or the dovish tone of the pause. Like, if they see significant risks and they're waiting to see if those risks abide, and if they don't abide, they are going to floor the hammer and give another hike. And if you read Westpac, Kelly Eckhold is one of the best analysts for New Zealand out of Westpac. He does a weekly editorial, you can find it in the Outlooks, where he talks about the expectations around the RBNZ, and he explicitly brings this component up, which is why I stress reading Outlooks so much. You learn a lot by reading the expectations of guys who have been doing this for a long time. And he explicitly points out that risk. Hey, it's probably not enough just to read the headline. You have to understand the meaning and the communication from the central bank about future policy, about the future policy path. So if they are giving a hawkish communication, I wouldn't expect to go this far lower. If they do give a more wishy-washy, Like it's not super straightforward that they're hawkish and they're like on the edge of their seat, ready to press the button to hike rates another 25 basis points. Then it doesn't make sense to go down this slope, right? However, if they are wishy-washy about it, then yeah, it could create an immediate jump and an immediate snap. Like, oh, the RBNZ really isn't so confident that they're going to have to give that rate hike after all. And sure, they might be higher for longer, but that's not right now. That's over the next several months. And as new economic data comes out over the next several months, the economic data on inflation in New Zealand could improve significantly. So that will set more neutral to dovish expectations for the RBNZ's policy path and for the path of the currency. It's important to understand these things. Again, it's the reason why I say go read your outlooks. It's like eating your veggies. It's like the mental veggies for traders. All right. Did I set a timestamp on these things quite yet? No. We'll go ahead and plug these in here. Yeah. Maybe a bit more like that. A little more on the conservative side. Just a bit of a bump, maybe up to the high of last week. Maybe you get past it. Maybe you get just below it. Within a margin of error, this is what I'm expecting. The current bit of information that I have available. Okay, let's go over to indices, starting with the ES. Yeah, this is why I did the preliminary stuff. Now I have to move all these lines. All right, let's check out our lows. Looks like we missed our closing expectation. We were good on the down and up, but we missed our closing expectation by quite a bit because it just held up here. But that drop could still be in store. Yeah, maybe just a bit less. Call it 2050-ish. Go ahead and pop in that expectation there. Set up the highs. Look at our high odds here. Yeah, that makes sense to me. Maybe just a bit more positive into the week ahead here. Probably a bit higher. Call it 5150-ish. It probably passes. It makes another all-time high as we get into the week. Okay, let's check out NQ. Probably did well because of NVIDIA. Yep. So far, it's held up. So far, so good. I may need to flip these lines here and set a down move first. So let's go ahead and look at our lows. Yeah, somewhere a bit lower like that. Yeah. It wants to move lower seasonally, but I'm not too sure we'll quite get that. It'll probably just be a fat bottom wick and then goes back to our higher odds. Yeah. Somewhere like that, and then reverse the expectation, essentially, from what I originally drew. So a bit more of a chug along on the NQ. And we can look at our closing odds here. Yeah, those are fine. That's nominal. All right, let's go ahead and check out commodities. Start off with crude. Well, crude missed our closing expectation. It just snapped lower over the last 24 hours of the week. Well, that sucks. It means that our expectations now had to get moved a lot more significantly now for the next week. Check out our low odds here. Yeah. Something along those lines. Similar view to NQ, actually. Very similar view to NQ. All right, let's look at our closing odds. Again, quite good closing odds in this spot here, this whole, call it $77, $79 range. But I'll set it here for the nominal expectation where the probabilities are in the ranges. You can see them right here, this little peak right here. These are where you have your highest density of closes for any given week. All right, let's check out gold. All right, we were at the close expected value, and then we just shot up into the end of the week. So some good news on gold, and then we can set our expectations much higher. See, this is why I didn't timestamp these, because I'm having to move them. Let's go ahead. Yeah, maybe something along these lines. There's pretty good odds of closing above 2050 next week. Yeah, gold could do pretty good if it holds up its strength. I don't know, in an environment where you're seeing disinflation, it doesn't make too much sense for gold to move terribly, but this is still quite volatile data, so I'll go ahead and keep that all in mind. I'm going to go ahead and delete this and just say we hit a likely high around 2050, the 2050 handle, and then find a more nominal close around this area here into the end of the week. So hopefully the spike here from the end of week on continues into the beginning of next week, and gold sees a bit more of a bump after trying to recover from the dumps over the last 2 weeks prior. All right, let's go ahead and do our Bitcoin and ETH. And so far, so good with our expectations into the close. A lot of closes next week between Central Pivot R1, which is about a $2,500 range. So real quick, I'm just going to set that as my expectation for the close. Yeah, a bit more of a slightly bullish skew into next week based off the seasonal data. The data given any weekly period is a bit more sideways, and there's still potential to continue recovering here into the end of this week. We'll see. But yeah, we'll go ahead and leave that as is. Now let's go over to Ethereum. We did set this expectation here, where a lot of closes for the month are either in one of these three spots, here, here, or here. This is your more neutral closes, your bearish closes, and your bullish closes for the month. And because we've moved really well on Ethereum, I'm still expecting plus 3,000 close by the end of the month here. And yeah, it does seem like it's in the cards. We can pull up the seasonal data, but we only have 8 years of data here, so I can't really do that great of an interpretation with the seasonal data here. We could go ahead and look at a couple of individual equities. Nvidia still holding up great. ARC pretty much going sideways. It's underperforming the expectation here. Maybe it just follows the more longer term month-long expectation that we had going into and closing around this spot here. But if it's a good week for equities next week, ARC will probably jump a little bit. Apple down a full % here on the day, which isn't so hot. But I'll go ahead and still set an expectation that we close nominally in this 182, 187 range here. And then figure out what's going to happen for next month. Next month has quite a bit of upwards skew to it. Yeah. Although we could be in for this next month here on Apple, which isn't so hot for the NQ. Okay. Everything I wanted to cover. I'll go ahead and say thank you guys for watching so late at night. I know this is not my usual streaming time, but I was incredibly busy today. So I appreciate all you guys watching and following up with these expectations. Again, if you want access to these things, you can just go in the description and sign up for the 10-day trial on WAP. And that'll get access also to the trading group. So until next Monday, I hope you all have a great weekend. And I'll see you all in a bit.